Over the summer, Berkshire Hathaway has made some headlines over their repeated selling of Apple and Bank of America and some other stocks. And Signe and I are wondering what could be happening with Berkshire Hathaway racking up that cash. And does Warren Buffett have something up his sleeve that the rest of us don't know? That's what we'll be thinking about on today's episode of Investing Mastermind podcast. I'm Michelle Markey.
And I'm Signe Lundhold.
So, Signe, what do you think about Berkshire Hathaway having over $325 billion of cash in either equivalents or treasury bonds just lying around?
It is very interesting. So, Buffett style investors, we've been discussing this topic since May this year at Berkshire Hathaway meeting, where there was a lot of investors present and, discussing why is he hoarding cash? What Warren Buffett says is that it's because of tax reasons, potentially at least for Apple stock, which he has kept selling for most of the year this year. It could be that, he's actually getting some gains. He always mentioned that he regret not selling Coke stocks at a certain point in time. And maybe, he learned from that and now he's doing what he wanted to do with Coke. He's doing that with Apple. But he did say at the Berkshire Hathaway meeting that Apple was a stock that he wanted to own forever, which is why we know that he probably is not going to sell all of his stocks. So another speculation. Now I'm just going to say it shortly, and then we can unpack in this episode here. But another thing that people are speculating is that maybe he's selling Apple because he doesn't believe in the stocks over the next couple of years. So that could be another reason. And the last reason is nothing he said, but something that we've seen he's done over and over and over again. He's ready to buy something and he needs cash for that. So let's unpack this in this episode. Before we do that, Michelle, can you think of any other reason why he would be selling these days?
Yeah, it could be that Apple is just that overvalued and the time is ripe to start liquidating once you've reached the full value you think a company has, and you think that it's now time to allocate to a stock or a company that could be better positioned to grow from here on out. So what if Apple has reached its maximum of selling the most iPhones and MacBooks it will ever sell, and it's not like the alternate reality or virtual reality types of technology equipment has taken off. So even though we know that's a kind of a gamified application, people are maybe not buying so much VR headsets. They're not maybe willing to spend $3,000 on that from Apple compared to the $300 or $400 version from Meta. So maybe Apple is just not able to grow or sell as much as it used to. And maybe that's a new reality of it just has reached its final point of having grown. Like it's still going to grow a little bit and still going to keep delivering. But what if it's currently at its peak for now until it figures out some way to keep consumers buying? And with some of the slowdowns around the world, like a lot of consumer spending went down in China, and that was a big area where Apple and other companies had made a lot of business before, and now a lot of American stocks are not doing as well due to less consumer spending abroad. So that could be part of it. And who knows if it's just for the next few years, but it's incredible. I mean, Berkshire went from having like several hundred million shares of Apple, like I think at one point maybe 900 million shares of Apple, to now only having 300 million shares. So they reduced their stake in Apple by more than half. And I don't know if it's a strong enough reason to only have done it to get some capital gains at a favorable tax rate. I think there's probably more to it, like some of what you're alluding to.
I think it's a great point that you have on that, it's actually more than just a little bit of stock that he has sold, more than, potentially that, to reap some tax rewards. As to what you're saying about did Apple actually reach the end of what they can sell, it's a very interesting point. And it's a point I've seen a lot of people discuss out there, that they don't believe in Apple anymore for the future, and that, they probably can't sell also after they, launched the virtual reality glasses, that it wasn't a big sell. They, are not looking into the self-driving car and things like that. What is important for me is that Apple, I believe, still has a strong moat. It's got the network moat where the products are fantastic to use, so that people would continue, when they need a new phone, instead of buying an Android phone, they would continue to use Apple potentially. And the reason for that is because it would be painful. And that's what makes a network moat, is that it would be painful to actually switch from Apple to another product. And what moat means is competitive advantage. Their competitive advantage is that the switch would be so costly. I'm thinking, for me, I would have to move all my music, all my documents, everything to a new system, and I would have to get to know that, and that would be super painful. And right now, I would rather spend the money on the phone, whatever it costs, almost on the Apple phone, in order to not having to go through the pain. And the reason for that is because my son got his first phone, which is an Android phone, and I spent days trying to set it up. And I was like, bruh, it's just a cheap phone. It's his first one, and it's a cheap one for a small kid. He's turning 9 soon. So it's not a big deal. But I was like, why did I not just buy a used Apple phone, an older Apple phone? Because it took me days literally to set it up, and having to go through all the pain, where with Apple it just works. So I think that's much easier, in my opinion. But that's what the competitive advantage that Apple has, is that it's easy to set up. It works seamlessly between a lot of different phones, etc. But I know that's not what we're supposed to talk about, but just to speak a little bit about Apple. So you don't think that it's necessarily is for tax gains that they're selling the stock, or what do you think? Why do you think they're selling then?
Maybe they're trying to find a better growth opportunity to invest the money. And so if you don't think even a golden goose will keep laying much more eggs, like you've gotten the most value out of it, as much as you can hope for, maybe there's another company that they want to invest in, whether they buy it in whole or in part. You seem to suggest that maybe with over $325 billion, it could be that Berkshire might be interested in another company that they can invest that, and maybe their dollars being invested in another company could go so much further and get maybe increased returns than currently where Apple is, that might not have that much more room to grow.
So one thing is what Buffett is saying, what Buffett is doing. He's talking about tax, and there's a whole lot of speculation about, Apple, whether or not the company is, still going to grow as much as in the past. Another thing is what we've seen in the past, what Warren Buffett has actually done rather than something he said. What we've seen in the past is that when he has had a lot of cash in his hands, it's because potentially he's waiting to be able to buy things on sale. And I don't think it's very likely that Buffett would ever do the mistake again of declaring that the market is overpriced. He's done that in the past, which actually resulted to a quote in a newspaper, and then the stock market just came crashing down after that quote was printed, that he did not believe in the stock market, or that he believed that the stocks were overpriced, and that he believed we would also see a pullback. And I remember reading it in a book. I believe it was Loomis, one of the books, or I can't remember, but it's a book with Warren Buffett quotes that person is commenting on. Maybe it was Rittenhouse that wrote a book about quotes and then commented on those quotes. So in the past, what we've seen is when Warren Buffett has a lot of cash, it's because he wants to buy businesses at a discount, and because he believes, so he could potentially be believing that we're going to see a crash, if not the whole market, then maybe in some sectors. So, he's not only selling Apple stock, but also other businesses. And that's what's interesting. There are certain businesses that he's also selling. Have you noticed that, Michelle?
Mm-hmm. Yeah, like in looking at the most recent 13F filing for the quarter ending September 30th, 2024, Berkshire sold way more companies than it bought. Like it only bought three companies, namely Domino's, where it put like $500 million in, and somewhere like maybe around 120, $140 million in something like Pool Corp and Heiko. And these are very small positions for something as massive as Berkshire. So the fact that they only invested in like $1 billion worth at most in any of these companies and then sold way more billions dollars. Like even Apple, they sold at least $15 billion worth of Apple. So they're just piling on the cash. So what were you going to note about these companies that Berkshire has been selling or buying lately?
Well, I've noticed that he's been selling a lot of
Mm-hmm.
bank stocks, and I don't know, but what I'm thinking is there something he's waiting for in that sector? Sometimes what happens in the banking sector is that banks get kind of greedy and have certain products in their portfolio that is very, very unhealthy for the banks also and for the society as a whole. And we saw it last time in 2008. And I wonder if he's seeing something in that sector that makes him, want to sell bank stocks. What do you think?
Yeah, that's an interesting scenario. Like with how probably in the times when there wasn't much to invest in, maybe banks got a little overextended with, say, loaning out to companies, or uh, I'm not sure how profitable some of the loans are on their books right now. If a lot of those loans were done during low interest rate times, so kind of before the run up of inflation, like more recently, banks could be making more profits on loans that have higher interest rates, but if the interest rates are going to go down now, I wonder how that would affect some of the likelihood of continuous profit for banks. And I don't really know much about how the banking sector works, so this is just my speculation. But I'm wondering if some of the Fed funds rate going down, if that will have effects downstream on the ability of banks to be as profitable as maybe they had been before. So I don't know, but that could be one reason, is maybe Buffett doesn't think that banks are going to be as profitable in the future as they had been in more recent times.
But also, if there's companies that, will go bankrupt in the future and has borrowed a lot of money, then the banks won't get their money back from those companies because they're going to be bankrupt and, might not be able to actually pay anything back to the banks. And then, we might potentially see how that's going to impact some of the banks in the future. So, we don't know what is going to happen. I'm sure there are smart people out there that knows exactly what is going on these days. And I'm not going to speculate on that, but I'm sure there's something going on since Buffett is so eager to sell so many of his positions in banks. But besides that, to go back to the topic of today of this, 325 billion in cash, I just see a lot of speculation out there and people being really confused about what is going on and, not necessarily believing that it's people might think it's normal for Buffett to hold that much cash, and he does certainly, usually also, he does hold a lot of cash, but what we're seeing these days is definitely something where I'm pausing and thinking, I wonder if he knows something that I don't know, if he's anticipating that something is coming soon, then I could imagine that he's just waiting for the market to the stock market to kind of fall or certain sectors to fall so that he have a lot of cash that he can actually use to spend on wonderful businesses that are trading at a discount.
Yeah, you would think. I think that seems to be the obvious reason to many people who identify as investors who invest like Warren Buffett. So if you're like Sienna and me, what we think Buffett is doing is just waiting until he can buy stocks on sale, but he could be wrong. Like maybe stocks never go on sale and they just keep going up and up for the rest of time. And all the companies that are buying back their shares are not wrong and buying back their overvalued stocks, like maybe Apple. Like it's a very counterintuitive place we're in right now of Warren Buffett is doing the opposite of what Tim Cook did this year. Like Tim Cook, the CEO of Apple, was buying back shares. And will he come to regret that if Apple shares were to go down in the future? Or will Buffett be made a laughing stock and just keep being wrong that there isn't another buying opportunity to buy stocks on sale? And all the CEOs who just keep buying back their shares at these valuations, maybe they're right, who knows? But it doesn't feel right. Like something feels weird that this market is very frothy. A lot of big tech stocks are still up, but how can you justify much more earnings when we know consumer spending is slowing down and there are a lot of overextended businesses and consumers who took on way too much debt over the past few years? How do we know that the good times will keep on happening? And I don't know. I think that's what seems like Buffett is waiting for. He's waiting to buy something when it finally goes on sale. But so far, the market is not willing to come crashing back down to reality, it seems like.
Yeah, I've noticed a couple of times now, just in the years that I've been a Buffett style investor, that when a lot of people start laughing about, and thinking Buffett is funny and how he made bad choices, and shortly thereafter, things are starting to happen. I remember a few years ago, there was so much chatter about Catherine Wood of ARK Fund and how she was doing much better and how she was the new Buffett and that his strategy just did not work anymore. And then shortly thereafter, it turned out that her choices weren't as good as Warren Buffett's was. So, short term, she was doing great, but long term, he was doing much better. And I haven't seen people laughing to the extent they did last time. So maybe we aren't quite there yet. But at some point, people are going to start to speculate if the Buffett style investing is broken. And then it's time for something interesting to happen. At least that's what I've seen in the past.
And we have no idea what the future holds. So anything could happen. But I think overall, we should stick to some sort of investing approach, whether you choose to follow how Warren Buffett invests or another investor that you admire how they invest. And I would stick to a certain methodology. I wouldn't go changing it up. Like you shouldn't go from investing like Buffett to now being a day trader. We shouldn't make such a drastic jump from one approach to another. If you're going to agree with the Buffett approach, it's something that you're willing to commit to for years. And it means, like Warren Buffett, I think this is the largest cash pile he's ever had. If you're like him, you're just going to hold on to these stocks for a long time, or you're going to hold on to your cash for a long time until you get your buying opportunity. So whether Buffett's right or wrong, maybe he'll have a chance to be right again in holding all this cash, but it's telling to me that he would rather only get 4.5 or 5% returns on treasury bonds than stay in the golden goose known as Apple. So maybe they don't lay golden eggs for the rest of time. Maybe they run out of eggs eventually, but so far it's revealing to me if Buffett would rather not earn that much in the opportunity cost to hopefully have something better in the future.
So, towards the end of the episode today, I also want to mention that maybe you have already noticed, but we've started to do like a bi-weekly podcast, so every 2 weeks rather than every week. And that means that moving forwards, we'll come out with the podcast every second week. If you're listening to this right now and we just came out, it's going to be 2 weeks before the next episode comes out. So with that, Michelle, do you have any final remarks on Buffett and his major cash pile?
Well, I guess it'd be just interesting to keep tabs on it. So keep being on the lookout for what the best investors are investing in, and good luck to all of us in our future investment decisions.
Absolutely. All right, guys. Well, that was it for now, and we'll be back in 2 weeks.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.